And we are live. It's your favorite insurance agent, DarnaldJr, and this is Finlit Live. This is a show where we talk about anything personal finance related. And today we're going to have a very unique show because I'm going to open it up to you, the audience, to ask any question. Let's have a conversation. Let's have fun. It's going to be great. So I don't know exactly what you guys are going to ask, but I'm super excited. So let's go ahead and get lit. All right. So before we get started, how about if you are watching live, put in the chat hashtag live. If you're watching the replay, put in the chat hashtag replay, and let's have some fun. I want to find out where everybody's tuning in from and find out what is happening in your world. And one of the biggest questions I have for you is one of the things you would personally like to see on the show, what type of guests you'd like to have, what type of questions you like answered. So if you're watching, put where you're watching from, and I'd love to know where the audience is watching from. And while we're doing that, while we're waiting for people to comment, I'm going to go ahead and share some announcements. One of the biggest announcements that's happening is happening tomorrow. So East Harris County Empowerment Council invited me on to be a guest on their show. They're having a workshop actually from 7 to 8 o'clock, and it's designed specifically for small businesses. And so even if you don't have a small business, I highly recommend jumping on because tomorrow's topic is going to be about sales. I know I look super young, but I've been in sales since 2002, so over 21 years now. And I have some tips and pointers that I'd like to share with you guys. And it's actually going to be a little bit of a preview for our big workshop that's happening on September 9th. And that workshop is going to be live in person. It's going to be interactive where you actually get to apply the things immediately. And I have a co-host. Her name is Jennifer Behan. Shout out to Jennifer. She is a certified behavior specialist. And so she actually went out and got certified on how the different personality styles work. And so with our expertise combined, I think it's going to be a phenomenal workshop. Last year, we had a really, really good turnout and also had a good response. And I actually want to share one of the testimonials with you guys from last year. And I actually refined some of the videos that I showed on the show last week, but I want to share those with you guys.
Hey everyone, my name is Jamal. I'm a senior credit analyst. I'm in credit repair sales. Last October, I attended Darnold's Boost Your Sales workshop. Prior to then, I was averaging about 40 deals a month. Any salesman knows that's not too bad. It's pretty good. But last month alone, I closed on 80 deals. And a lot of that was due to the fact that I used the techniques that Darnold taught me. I mean, for a couple hours of that workshop, boosting your skills by double, that's a good deal in my book. If I were you, I would attend. I know I'm going to be there. Let's go.
So tomorrow is the workshop, the short workshop, and then on September 9th is going to be the big workshop. So I appreciate Jamal for being willing to be in the video and share his story and his testimonial as far as his experience with the workshop that we had last year. We have a couple people commenting already. JT Vlogs said, hey Darnold. Hey JT Vlogs, how are you doing? Tell me where you're tuning in from and how's life, and what questions that you personally have about your personal finances. Some of the questions that you'd like to get answered, and I could bring on guests and specialists on the show. I definitely stay in my lane. I've been in insurance for over 13 years now, and so I stay in my lane. Like insurance is my specialty, but I know a lot of people. So what I'll do is I'll bring them on the show and I'll interview them live for you guys. Aaron Hill. Hey, Aaron. It's been a long time. I appreciate you guys for tuning in. He said Darnold is amazing. This is Hasier. Hey, Hasier. I'm super excited about Hasier because he is a trucker and he's on the road. So definitely be safe if you are driving. So, hey, Hasier, I'm glad you are tuning in live tonight, and I appreciate you guys for tuning in. This is really fun. This is one of the highlights of my week is jumping on the show and be able to share information with you guys. So today we're doing a question and answer show, and really I want to question you guys because I want to find out what areas of your personal finance that you would like to grow. Would you like to see more about budgeting? Would you like to see more about real estate, about cryptocurrencies? There's a lot happening in the cryptocurrency space right now. The SEC is actually about to go after some of the other cryptocurrencies. They're currently in a lawsuit with XRP, and it's been over 900 days of lawsuits, and they have yet to resolve it. It's been incredible to follow that story. One of the things I do want to share with you guys that I've been passionate about, and I've been hinting at previous shows, is kind of the history of money and this whole debt ceiling. I know it just got resolved in the national level, but the whole debt ceiling thing, in my opinion, is a big scam, honestly. Our whole monetary system is built on sand. And what I mean by that is literally the Federal Reserve prints our money out of thin air. Like literally, they have a zero balance and then they make it. And then the government borrows that money from the Federal Reserve. And so, since they're borrowing the money from the Federal Reserve, the government has to pay it back. And not only pay it back, but they have to pay it back with interest. And so that's actually what they do with our tax dollars, is when they collect our tax dollars, they use it to pay the interest payments. And it's been an interesting time because since the interest rates are going up and up and up, guess what? The interest payments to the Federal Reserve has been going up and up and up. And so it's kind of fascinating if you really dive into the history of money and how money works. And it's incredible too. One of the things that people don't realize is that when people deposit money into the bank doesn't hold it in an account and it doesn't just sit there. And you may or may not know is what they do is they actually take that money and that's what they use to create loans with. And so literally, most banks have to keep at least 10% of the money you deposit. Some banks could keep even less, and that's called the reserve that they have to keep, mandated by the government. But the thing is, what they do is they'll take, so let's say you deposit $100 into the bank, and they only have to keep 10% of it. So what they'll do is they take the other 90% of that and they lend it out to other people. So let's say somebody buys a car, they take out a loan for the car. And so they take that 90% and they deposit in their bank. And guess what? That bank has 90%, but they're able to lend out 90% of that 90%. So literally, they take that money, lend it out to other people. And then once again, the process continues and continues and continues. So just based on $100, really over $1,000 is created based on every $100 we deposit into the bank. And it's literally made up money. Like most people think it's the Federal Reserve that makes the most of the monies, and it's actually not accurate. It's actually the banks that create most of the money, and it's all ones and zeros in a computer. So it's literally not paper money that's sitting in the bank. And this blows my mind. So that's why the Great Depression happened, is because when there's a run on the bank, that means all the people that want to take their money out of the bank, they go to the bank and they try to withdraw it. And since guess what? The bank doesn't have it in the reserves in their vaults. And so if too many people do that, then that's what creates the bank run. And that's ultimately what created the Great Depression. That's actually what happened to some of the banks recently, some of the regional banks, is because they were lending out money to a lot of startup companies and they actually didn't have this money in reserve. So when all these big companies tried to pull the money out, the bank is like, we don't have it. And so that's when the government stepped in and bailed that bank out specifically. So the incredible part about that is the FDIC only insures our money up to $250,000. So if you have more than $250,000 in a bank account and there's a bank run, guess what? You lost everything beyond $250,000. So I think a wise move is if you have more than $250,000 is to put it in multiple banks. And that way it's insured from multiple bank accounts. That way, if there is a bank run, if something like that happens ever again, then your money is insured. So it's very wise to be able to diversify your money into multiple banks if you're dealing with that type of money. So we have a couple questions. So Jacier says he wants to know about budgeting. Yeah, budgeting is a huge subject. That's something that I'm very adamant about myself. I'm very meticulous with my budget. I know I actually update my budget on a weekly basis, and budgeting is so important because if you don't know where your dollars are going, then guess what? You lose control. Like you have to tell the dollars where to go before you even get those dollars, and that way you have a specific plan. If you have a specific goal, so I definitely love to bring some people on that are experts in budgeting. I have my budgeting system, but I know there's other people that this is specifically what they do is help people with budgeting. So I'll definitely bring people on the show that do that. And so Raymond says, do banks also trade via gold? So that would be the ideal situation, and it's different in different countries. But here in America specifically, our dollar was taken off the gold standard in 1971. So what that means is historically, every dollar that was out there, it was tied to gold specifically. And then they took us off the gold standard. So that means they could print more dollars than there's gold that's out there. And I had a show on BRICS. Definitely watch that show as far as what's happening on the international stage, how all these countries are stockpiling gold right now. And the United States is basically flat in its gold reserve for the past couple of decades. Like we haven't increased our gold reserve. And all these countries are trying to take the world off the United States dollar as the world currency. And so it's very fascinating times. So that's the purpose of the show, is to get educated so you know exactly what's happening. And education is so important. That way you could be proactive versus reactive. You won't be blindsided by things like that. So we have, I am Darren, says, hey Darnold, tuning in from Houston. I want to know your suggestions on acquiring a first-time home loan without a W-2 job. So once again, I'm not an expert when it comes to that, but I do know people that have actually been hearing that rumored lately. Some mortgage brokers that I've been talking to have different products that actually help out with that. And so the key, if you don't have a W-2 job, is you do have to keep meticulous records of your income and statement sheets. And they also want to track your taxes for the past 2 years. So if you know you're in the process of buying a home in the next 2 years, make sure you do your taxes to the point where you show enough income where you know that you could be able to purchase the type of home you want to talk to. But I definitely going to have a mortgage broker on the show again. And that way you can ask specific questions, because I know there's specific products out there that are specifically designed for 1099 type people. And I just heard that recently. So definitely would like to share that with you guys. In addition to that, how can I establish an emergency fund and why is it important? Oh my gosh, emergency funds are vital nowadays, because what happens is they recommend to have 3 to 6 months of emergency funds set aside in your savings. And the reason is, like, if something happens, you don't want to have to rely on credit cards. You don't want to have to rely on debt in order to pay for emergencies that happen. And they say the average American can't even handle a $500 emergency that happens, like if their car breaks down or their AC goes out or if something happens. And so that's why it's so important to have that emergency fund. But outside the emergency fund, you don't want to have your cash just sitting there, because you can't save your way to $1 million. Let me repeat that again. You cannot save your way to $1 million. You have to be able to leverage your time. You have to leverage your money. You have to be able to leverage other people to be able to achieve that. And so if your money's just sitting in savings, literally you have to work your whole life. Even if you work your whole life, it's going to be really difficult to save $1 million. So there has to be some other vehicle you have to use to be able to establish that. And then Raymond says, what are the most common tax deduction and credits that individuals should be aware of? So tax deduction and credits, once again, I'm not a tax professional, so I would love to have an accountant on the show. I'm actually actively looking for CPA because I have a group that I'm a part of, and they're specifically looking for CPA. So I'd love to have them on the show also. So great questions. These are questions, once again, my expertise is insurance. And so we'll bring these professionals on the show to get these questions. I'll definitely save these questions and have them on. All right, we have more questions. How can I protect my personal and financial information from identity theft and online fraud? So I think it's virtually impossible to 100% protect it, but there's things that you could do that if it is stolen, that you could be compensated. So one of my buddies, actually Gerard, he works for a company called Legal Shield, and they have an identity protection program. And Gerard was actually on the show. He was one of my first guests that was on the show. So there's different companies out there that will definitely protect your identity, protect you from theft and online fraud. And that's actually a really great question because of all the AI that's happening right now. Like AI is going to be able to clone people, and it's going to be hard to tell what's true, what's not true. There's so many fake Facebook pages that are popping up left and right. I see every day, oh, don't answer that Facebook. Somebody hacked my Facebook account. And so you don't know what's true is not true. I just heard a story recently too, where somebody hacked somebody's Facebook page and they were asking their friends for money, and that their friends was actually giving them the money. And it was like over $1,000 that they were giving this scammer. And it was crazy. But I was like, hey, at least you know your true friends. At least you know who would give you money if times were really, really bad. And so that was really cool that they were willing to do that. So let's keep going. We got a lot of questions. I appreciate you guys for tuning in. I appreciate you guys for commenting and asking questions. This is really fun. I've never done a show like this, so this is really, really fun. So how soon can you borrow against your life insurance policy? So that just depends on your life product. It depends on the company. I know for our product specifically, I represent Globe Life Family Heritage Division. There's different divisions underneath the Globe Life. And so our division has a really specific life insurance. It's actually a whole life product. And for ours, I know you have to wait at least 2 years before you could borrow against it. So I could speak specifically to what I represent, and that's here in Texas. And so, but there's different products and different companies out there, and they all have different terms. So you would have to shop to somebody that's a broker that could go through different products and find the terms that are specific to you. So I know there's some products out there where you could overfund your life insurance. And if you overfund it, then you have access to that cash immediately because it builds cash value, and cash value is so huge. And so, yeah, it's about helping you guys build wealth. How do I choose the right type of insurance coverage for my needs? So there's different ways that people determine their needs for life insurance specifically. Some people determine it based on their expenses and they multiply it out. Some people have what's called a mortgage protection product, which that means if you die, the life insurance pays off your mortgage. So you get enough coverage that will cover the remaining balance that's on your mortgage. And then some of them are actually refundable if you don't need it, and like you pay off the mortgage and you don't use the life insurance. So that's pretty cool. So there's a lot of different life products that are out there. My encouragement for you is to do your research. The two main, just to educate you a little bit on life insurance and the two main types of life insurance. So there's whole life and there's term products, whole life and term. And you're literally going to know more in the next less than a minute than most people know about life insurance in general. So I always like to make an analogy with it. With term life, it's kind of like renting an apartment. So you never actually own it. And it's like the name applies, is short term. So the term could be 5 years, 10 years, 15 years, 20 years. Some terms are till you're 80 years old. If you have a life insurance policy through your job, the term is as long as you're working there. And the moment you leave, guess what? You lose it. So if you have life insurance through your job, highly encourage you to buy a policy outside your job, because as much as you love your job, the odds of you retiring from there are highly unlikely nowadays. It could happen, but people jump from job to job. You get promoted, you find a new opportunity, things change, they downsize, whatever happens. So I highly encourage, because you are the youngest now than you'll ever be for the rest of your life. And you're most likely the healthiest now than you'll ever be the rest of your life. So now's the time to get it while you are the youngest and the healthiest, so you could get the best rates and the best terms. So term insurance, the reality with term life insurance is only 3 to 6% of the people that own a term policy actually use it. Let me say that again. For term policies, only 3 to 6% of people that have a term life policy actually use it. So guess who wins? Yeah. Well, you win too, because you survived, right? You're still alive. But yeah, more times than not, the insurance company wins. So whole life is just like the name implies, it's your entire life. So from the time you pick it up to the time you pass away, it covers you. Usually if you live to 100, they usually pay you the face value at age 100. So it's like, woohoo, you made it to 100. Let me give you a big old lump sum check. But the odds of living to 100, some people might, but it's probably highly unlikely. But whole life covers you your whole life. So guess what happens to the premium? Most people die. Like 1 out of 1 people die. I'm a Christian. I'm not trying to push my beliefs, but according to the Bible, only 2 people didn't die, and even Jesus died in the Bible. But it's Enoch and Elijah. They didn't die in the Bible. So all that to say is, more times than not, the odds are you're going to die, right? So whole life is way more expensive than term because everybody's going to die. Everybody's going to use it. It's going to pay out when you need it. So that's the advantage of having a whole life. And so there's strengths and weaknesses to both of them. So it's ultimately just sitting down with the insurance agent, discussing what your goals, what your plans are, and finding out what best suits your lifestyle, what best suits your needs, what best suits your beneficiaries, even more important, because if you have people that are dependent on you, then you definitely want to have that conversation with everybody. So let's go. And then we have Raymond again. What are some practical tips for managing debt and avoiding financial pitfalls? The practical tool is don't buy debt that is consumer debt. But if you ascribe to Robert Kiyosaki, Rich Dad Poor Dad, great book, phenomenal book. I highly recommend it. One of the things he talks about is there's a difference between good debt and bad debt. And so if you're a Robert Kiyosaki fan, then you'll know exactly what I'm talking about. So good debt is debt that actually makes you money. So for instance, it could be invest in real estate or some stock instruments where you could buy stocks on margin and do options on margin. And so that's good debt if you know it's going to make you money. Bad debt is like consumer debt if you want to buy like clothes and shoes and things ultimately that doesn't make you money. And he actually says that owning your own house is actually bad debt because you're actually not making money off your house while you're currently living in it, unless you're renting out a room or two. If you're not renting out a room or two, guess what? You're losing money, right? So it just depends on what your goals are, good debt and bad debt. So that's Robert Kiyosaki's philosophy. I'm always torn between Robert Kiyosaki and Dave Ramsey. Dave Ramsey is all debt is bad debt. and I could see why, because the average individual does not know how to manage debt properly. They buy things on credit card. They never pay off their credit card on a monthly basis. And since you don't do that, you end up racking up a lot of interest on that purchase that you made. And so I always phrase it like this: is like happiness today at the expense of tomorrow. So not only do you pay for the cost of the item, but you actually have to pay it back with interest over the long run. So you end up paying way more than what it's worth. And so that's some of the financial pitfalls people end up falling in, and just becomes this downward cycle. Instead of actually paying the principal off, you're actually just paying interest on the credit cards, and it becomes a huge downward spiral for a lot of Americans specifically and people around the world. So the disciplined thing to do is to be able to save up and save and save and save, and then pay whatever you're trying to buy free and clear. That way you can own whatever item you're trying to purchase. You can own it free and clear. You don't even end up paying back it with interest. And so that's huge. So I definitely, sounds like you guys are very interested in budgeting and how to pay down debt and how to have that. So I'm definitely going to bring a financial planner on. I'm going to bring a tax consultant on. I'm going to bring somebody that is a mortgage broker so you could get your question answers. So I appreciate you guys for tuning in. This has been fun. We should do this more often. Maybe I should do this like once a quarter to find out exactly what type of people you would like to have on the show, because this show is all about you, about getting your questions answered. And that way we can educate ourselves on how money works. Because if we educate ourselves, the difference between where you're at and where you want to be financially is knowledge, but not just knowledge, but application of that knowledge. And that's what I call wisdom. So we have to be very wise with how we operate in this world, because this world can be very shrewd, and we have to understand how the world works. We have to understand how money works. That way we could win in the game. I just call it a game. And I would like to end with this last thought. A lot of times people associate their self-worth with how much money they have in the bank account. And that's the saddest thing in my opinion, because like I mentioned earlier, the government literally just makes it up. It's literally made out of thin air. And people are associating their self-worth out of based on their dollar amount that they make, type of income they make, or the dollar amount that's in their bank account. And I think honestly, that's one of the saddest things in the world. So my encouragement to you is that money is just like a tool. That's all it is. It's a tool. It's like if somebody had a toolbox and one person had 5 hammers and another person had 2 hammers, like you don't derive your self-worth based on how many hammers you have in the toolbox. And that's exactly what money is. It's just a tool. However many tools you have in that toolbox, like that's how many tools you'll have to use to be able to get things done. But guess what? That doesn't determine your self-worth. Your self-worth is infinite. Like you are infinitely valued. You're infinitely loved. Like you need to know that no matter what your financial situation is, you are valuable. And the moment you realize that, you can have a peace and a calm within you that surpasses all understanding, that you're not whatever the market says you are. That's not you. That's not who you are. You are infinitely valuable and you are loved. And so I appreciate you guys for tuning in to the show. I hope you got some value out of it. You got any value out of today's show, smash that like button. If you're on YouTube, go ahead and subscribe to the show. I'd love to have you as a subscriber. We go live every Tuesday nights at 7 p.m. I've been having fun doing the show. I hope you've been having fun watching the show. And I appreciate you guys for tuning in and for getting lit.